Welcome to the Dealmakers podcast. The Dealmakers is a platform for leaders in the commercial real estate industry to share their personal stories, business insights, and industry secrets because we believe in spotlighting the real people behind the deals. This podcast is brought to you by Agora, a comprehensive real estate investment and management platform offering a wide range of services to enable real growth and provide the best real estate investment experience both for GPs and LPs. I'm Asaf Raz. Let's go.
And today with me, I have the amazing, the 3 times rescheduling podcast, that's on me, Brittany Shulman from Clever Capital Fund. She's the investment director at the Clever Capital Fund. It's a new fund started by Cody Sperber. Did I say that right? Sperber. Okay. So by Cody Sperber, the clever investor, with a mission to change the landscape of typical funds. They offer a unique hybrid model with stable, predictable returns for new and experienced investors. Brittany, please take it away. Tell us about yourself. Tell our audience about yourself, and we'll take it from there.
Yeah, thanks for having me, Asaf. I'm glad we finally made it happen.
There we go. There we go.
A little wonky there, but so I am the investment director, like you said, for Clever Capital Fund. This is actually their 3rd fund. My experience goes way back to 20-something years, believe it or not. I actually got started in real estate when I was 16, licensed at 18. All forms of commercial real estate, from brokerage to an investor myself, raising capital, you name it, I've tackled it. I formerly had my Series 22 and 63 as well as my real estate license, which I still hold today. So that brought me to Cody, the clever investor, like you mentioned. He has a huge following. He is known for his education in real estate.
No one knows this, but Brittany just told me this is her first podcast, and this sounds like a lie. Okay, this sounds like this is great. I think you're going to be amazing on stage, just as much as you're a host on this podcast. So yeah.
Thank you. Yeah, I've been doing, more recordings. This is my first podcast. We did a webinar, so I'm slowly getting, the hang of it.
Awesome.
Yeah, no, it's going to be great. We're going to be talking all things real estate. And then, of course, it's technically our official launch of Clever Capital Fund. So like I said, this is the 3rd fund. The guys, which are Cody and his partner, Bryant. And then there's 2 other partners, Christian Cotta and Phil Bramson. They have a lot of experience on the retail side of commercial real estate. So that is one of the asset classes that we are targeting. So it's basically value add retail. For instance, we've bought, a vacant bank building. We've bought a couple of those, actually. Online banking is becoming a big thing. So these buildings are now obsolete. So we're going in, they're A+ locations, but they're a lot more affordable because there's no tenant in them. And obviously they're very specific, those building types. So you can't just slide another tenant in, right? So we go in and we sign leases with like Circle K or Chipotle drive-through. A lot of the times they'll scrape the building, ground lease it. We package it with a bow and sell it off to an end user. So value add retail is one of our main focuses. And then also land entitlement with a retail component. So again, we'll do the permitting, all the horizontal stuff, entitlement, sign leases, and then we sell it to an end developer. And then affordable housing is our 3rd asset class. Not affordable housing like you probably are thinking, like Section 8. It's actually manufactured houses. Very nice ones too. I know when you think of like a manufactured home, you think of maybe a dirty trailer, but these are gorgeous. We put them on 1 acre plus lots just outside of, the major cities. And it's great for baby boomers, who can't really afford these high prices that are inner city. And they get a great house, they get great property, they can still have an FHA loan, but it's a fraction of the cost. So we're really happy to be providing that value to them.
That's really awesome. So there's a lot of things that are happening at Clever Capital Fund, right? How are you unique compared to other funds out there?
So glad you brought that up. So the guys, like I mentioned, they had 2 other funds, right? They had a debt fund. It was a $5 million debt fund. They did a multifamily fund as well for a single asset syndication of 412 unit. And with this one, they kind of wanted to take the best of the debt and equity worlds and create a hybrid model. And what I mean by that is because of our deal types, the average deal is about anywhere from 4 months for the manufactured homes to maybe 3 years is the longest, and that's for the land entitlement. So we are offering very short-term hold periods, 1, 3, and 5 year options for investors. So they're not holding up their money. They're not going to be illiquid for 5, 7, 10 years like a lot of these funds. So one way we're different is offering those shorter time periods. The other way is offering just a fixed return, a fixed predictable return at 10, 12, and 14%, depending on which time frame you want to choose to invest with us.
Yeah.
And that's it. And you know exactly what you're getting. It's paid out every quarter. It's got great double-digit returns instead of, a lot of these hopeful IRRs, right? A lot of funds out there, they're creating pro formas that are based upon 5 years from now. It's like, I don't even know what's going to be happening at the end of the day, let alone 5 years. So we wanted to just offer some certainty in a time of a lot of uncertainty right now.
Yeah, and let's deep dive into this. This is something I ask every guest on this podcast, right? So we understand the unique model that you work in and how you raise capital, how you offer positive returns for investors. But how do you hedge that against general economic cycles, and especially this one, where I don't think most developers or most funds today, especially when they go into value added, especially when they go into value added multifamily, right, we're actually able to hedge like you guys are saying that you do. So how do you do that with the current economic cycle and then in the future ones as well?
Yeah, I mean, the stock market right now is really scary. I don't know if you remember, but a few weeks ago, there was like $2 trillion just wiped out. And, there's nothing you can do about that. So at least with our fund, you know what you're getting in your return. You see light at the end of the tunnel when you're getting your initial investment back. And you're backed by real estate. So it's an actual tangible product versus the stock market, which is all over the place. I don't even know if the money in there is actually real. You know what I mean? Like it's attached to a lot of factors that go into, businesses, and you're just not getting that one-on-one approach like you would with our fund. And you can actually drive by the properties and say, I'm an owner in that. We also provide K1s. So a lot of times with these debt funds, you're 1099. So you don't get to take advantage of the tax benefits and the depreciation. So we still offer a K1, and depending on, your pro rata share, you'll get to use that tax benefit for yourself.
So how does that, let's deep dive into this for a second. How does that work, right? Because essentially you're running a fund, right? But you're still offering those K1s. How do you play this game with both internally, externally, and especially how does that benefit your investors?
Sure. So we all know we want a tax break of some sort, right? If we make X amount of money, we're hoping we get enough deductions to deduct, whatever tax bracket we can be in. By investing in an equity fund that's backed by real estate, it's our job to put certain properties placed in service. That way you guys can get that tax write-off. Now, even if a fund and a property is making money and you're still getting income, the K1 with the depreciation really helps because it shows a loss. You could be making a lot of money, but it's still helpful to have that depreciation because you want a loss. So a lot of investors, they get nervous. They're like, oh my gosh, I'm not making any money. It's like, no, you are making money. You're just able to write that off on your taxes a little bit more to give you a break.
Yeah. Awesome. That's amazing.
Hopefully
So let's focus on the market a bit. So let's focus a little bit about your financial modeling. How do you underwrite assets? How do you choose your assets today? I think it's both relevant for LPs, looking to invest, for investors looking to invest, but also I think our listeners who do run funds today or syndications today, and how they choose their properties, especially with the current economic cycle. How do you do that? How do you assess a property if it's good, if it's not good? What do you look for?
No, we have an amazing team that focus solely on acquisition. So what's great about our fund as well, is we have our own in-house brokerage. We have our own in-house development company. So being able to have everything in-house, it just makes everything run very smooth. They know the end goal. We know the end goal. We can all talk to each other. So that's one great aspect. And within that, we have the tenants most of the time already in our back pocket. So Christian and Phil, they've been doing this for 25, 30 plus years. So they're part of that good old boys club that, know the right people. They kind of get the word of mouth before anybody else does. And we just get access to opportunity that not other funds necessarily get from having that experience, right? So how we do it is we basically reverse engineer everything, and we put a lot of work in the front end of the deal. And what I mean by that is, let's say we have the Circle Ks, right? We know we have a relationship with them. We've already done deals with them. We know what they're looking for. So we go out and use our proprietary software. We have a bunch of really cool software that we use. I won't geek out on that stuff right now, but it helps pinpoint, based on demographic and location and hyper growth within, the housing market. So we're sourcing these sites. Then we're going in and configuring everything before we even approach the seller or the owner, right? And we go in there. Same thing with like these CVSs and Walgreens. They're all going to be closing down, a lot of them. So we're reverse engineering before we even go to the owner. We know exactly the tenant, how we would configure the building. And a lot of times, the owner has no clue that that's even going to happen to their building. So we come in and save the day. And the reason why we put in that work in the front is so we can access those unique offerings.
That makes sense. And let's geek out for a second. Let's do some name dropping. Give me some name dropping. People need those things, right? If you're using them, let's do some name dropping. What are the tools that you're using today?
That's like the Christian question. So I don't even get involved in that arena. All I know is we've spent over $100,000 in our software. We've customized it. A lot of it is AI, and a lot of it is still, the same tools that everyone else is using. We just have a what I like to call a stack of technology.
I like that a lot. And I think this is a big focus and a big shift we're seeing in general in real estate funds or in syndications where, investors expect it. You as an underwriter or you're looking into assets and you're trying to understand how they are, what they do, like using big data, machine learning, AI is definitely very, very helpful. And for the last piece, what we always do is what I call the shameless plug. Okay. And the shameless plug is where you shamelessly plug in what are you doing today and especially what you're looking for. We've had a lot of connections happen behind the scene in this podcast between we've had investors invest in new funds or new syndications. And we did have also developers, funds, syndicators group teaming up together behind the scenes to do their own business. So it's a great opportunity for you to just say it as it is. What are you looking for? What do you want? What's ideal for you today? And see if our community can reach out and do business together.
Amazing. Yeah. I mean, listen, we're always looking for accredited investors. So our fund, I forgot to mention, is a 506c Reg D. That's important to know because we only accept the accredited investors. So if you are looking to be a part of our deals and our structure, we would love, the great thing about investing in this fund compared to other funds is the education piece. Being that Cody, that is his passion, that is his background. We're not like the funds where you put your money in, maybe you'll hear from them, or maybe you'll just get a boring quarterly report. We're always creating content. We are always available for people that really want to dive in and understand the deals, because we see it like, hey, the more that our investors know about our deals, they're going to probably look and find some deals for us to do. Like, we would love to do deals with our investors and our partners, So that would be my plug. I would say, get into the fund. If you're an accredited investor, we'll teach you how the game is done. We'll do deals together and make a lot of money.
That's amazing. And again, the link for the Clever Capital Fund is going to be in the bio of this episode. So it's easy to click around. And if you're an accredited investor, go for it. I think it sounds like a great opportunity. Awesome. So, Brittany, thank you so much for joining me today. for another episode of the Dealmakers podcast and sharing your valuable insight and experience with us. It was really enlightening and kind of understanding your journey within this industry and your, again, very unique perspective of how to do real estate. To our listeners, thank you for tuning in to another episode of the Dealmakers podcast. If you enjoyed this episode, be sure to subscribe so you never miss out the latest conversations with industry leaders. If you have any suggestions for future guests or topics, or if you'd like to be a guest yourself, please reach out to Agora via our website or social media. Stay tuned for more exciting episodes as we continue to explore the stories behind the deals and the people making them happen. I'm Asaf Raz, and we'll see you next time on the Dealmakers podcast.